Well folks, it seems the trade war between the US and China has officially turned into a full-blown tariff tango. And let me tell you, the steps are getting pretty aggressive. Just this week, China decided to crank up the heat by slapping a 125% tariff on US goods. This came as a swift and decisive response to the US bumping their tariffs on Chinese imports to a hefty 145%. It's a classic case of you raise me, I raise you, except with billions of dollars worth of goods caught in the crossfire. Like a couple arguing over who forgot to refill the Brita, it seems like both sides are more concerned with escalating the fight than finding a resolution. Now you might be thinking, John, why should I care about a bunch of tariffs? I'm just trying to afford a coffee that doesn't require me to take out a small loan. Well, hold on to your oat lattes, folks, because this trade war is already causing some serious turbulence in the global economy, and things could get a whole lot bumpier from here. Remember those stock market tickers you see scrolling across the bottom of the screen during cable news? Well, lately they've been looking more like a heart rate monitor during a particularly stressful game of Tetris. The US stock market, known for its wild swings even on good days, has been on a roller coaster ride fueled by tariff anxieties. The S&P 500, a key indicator of the market's health, has been yo-yoing up and down like a yo-yo that's also on a roller coaster. One minute it's up 2%, the next it's plummeting 2%, leaving investors feeling like they need a strong drink and a lie down. And it's not just the stock market feeling the heat. The mighty US dollar, once the undisputed heavyweight champion of global currencies, has taken a bit of a beating. It's been weakening against other major currencies like the Swiss franc and the Japanese yen, hitting lows not seen in years. It seems even the world's reserve currency isn't immune to the uncertainties of a trade war. The trade war isn't just a domestic squabble, it's causing ripples across the global pond, and some of those ripples are starting to look more like tidal waves. Over in Japan, the Nikkei index took a nosedive, plunging over 4% in response to the escalating tensions. South Korea, another major player in the global economy, saw its stock market dip by 1%. And even across the Atlantic, European markets haven't been spared, with the Stoxx 600 index down significantly. It seems everyone's feeling a little uneasy about the future. Meanwhile, the European Union is starting to feel like the friend caught in the middle of a couple's argument. They're strategizing on how to respond to potential US tariffs on their goods, which could target everything from steel and aluminum to cars and pharmaceuticals. And let's not forget China's decision to file a formal complaint with the World Trade Organization over the US tariffs. It seems everyone's lawyer is about to make a lot of money. So, what does all this mean for the average Joe and Jane trying to navigate their daily lives? Well, the short answer is, it's complicated. But the long answer is even more unsettling. The UN's trade agency has issued a stark warning, suggesting that this tit-for-tat tariff battle could have a catastrophic impact on the global economy. They're talking about a potential shrinkage of global trade by as much as 7%, which could send shockwaves through industries and households worldwide. Analysts are starting to whisper the R-word, recession. It's a scary thought, and while it's not a certainty, the risk is undeniably higher now than it was just a few months ago. The escalating trade war, coupled with the volatile markets and weakening dollar, has created a perfect storm of economic uncertainty. So buckle up, folks, because this tariff tango is far from over, and it's anyone's guess what the next move will be.